Canada is a huge provider of raw materials, and unsurprisingly, this makes the materials sector a one-stop stock shop. Hold on to your lumber, folks. This is going to be a good one. Canada is the second largest country in the world and is also blessed with an incredible wealth of natural resources, from forestry, oil, and wheat to the mining of precious minerals needed for almost everything from nuclear reactors to EV cars. These resources not only drive the nation's economy, providing jobs and revenue, but they also play a significant role in the global supply chain, making Canada a key trade partner for many countries around the world. With more and more pressure for Canada to step up and take center stage in this sector, now is the time to perhaps take a second look at the investment opportunities available within the Canadian materials sector. Join the conversation. Let us know in the comments if you currently hold any natural resource stocks. Your participation is of course well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that. Click. Until September 13th of 2023, Wealthsimple has this really cool promotion ongoing where you get 4 times the reward with my link below when you sign up and fund a new account. That means you have a chance to get up to $12,000, bare minimum $20. I have seen some pretty lucky people get some pretty big payouts. Maybe you can add your name to that list. Full disclosure, the channel also gets to try our luck as well when you sign up. Now for today's list. The qualifiers I used was that all of the stocks needed to have made a return this year, have a positive return on equity, and have at least a trickle of dividends to qualify them as total return stocks. The list is of course sorted by their year-to-date total returns, so without any further ado, let's do this. Kicking off this list, we have Methanex Corporation with a ticker of MX. They are based out of Vancouver, and they are the world's largest producer and supplier of methanol to major international markets. Methanol, as well as its derivatives, are used as a base material in acrylic plastic, synthetic fabric and fibers, adhesives, paint, and plywood. They have a market cap of $3.97 billion, and they have a beta of 1.99, making them pretty much twice as volatile as the market average. Their earnings per share come in at 4.44, and they have a price to earnings ratio of 13.28. Their return on equity comes in at 15.76%, and their debt to equity ratio, a little bit higher than I like to see, 131.64%. When we look at their yield, they have a dividend yield of 1.646%. That is paid out quarterly in the amount of 18.5 cents USD per share. Their payout ratio comes in at a very sustainable 21.65%. Looking at their returns on the 3-year return on investment, we come in at 93.25%. Add in those dividends, we get a total return of 97.76%. When we switch over to their 1-year return on investment, that comes in at 14.13%. Add in the dividends, we get a total return of 15.51%. And this year, in 2023, their return on investment comes in at 15.11%. Add the dividends in, we get a total return of 15.81%. I can't complain about these returns, and they are definitely set up for more future profit. Coming in at number 4, we have Lundin Gold Inc. with a ticker of LUG. They are also based out of Vancouver, and they develop and operate a major gold deposit in Ecuador. Their market cap comes in at $3.77 billion, and they have a fairly stable beta of 1.10. Their earnings per share come in at 0.61, and they have a price to earnings ratio of 26. Their return on equity, that comes in at 15.47%, and they have a debt to equity ratio of 42.85%. Looking at their dividend, that yield comes in at 1.709%. It is paid out semi-annually in the amount of 13.4 cents per share. They have a payout ratio of 88.89%. I will point out they only recently started paying dividends about a year ago, with their first dividend dropping on September 13th of 2022. So there's still some wiggle room in getting that all settled in and getting it a little more consistent. When it comes to their returns, on their 3-year return on investment, that comes in at 38.39%. Add in the dividends, we get a total return of 43%. On the 1 year, their return on investment comes in at 79.21%. Adding in the dividends, once again, we're up to 85.18%. Looking at 2023, their return on investment so far this year is 17.83%. After the dividends, we get a total return of 19.84%. Once again, we have some solid returns and not a bad option for exposure to gold. Taking our 3rd spot, we will stick with the gold as we have Alamos Gold Incorporated with a ticker of AGI. They are based out of Toronto, and they acquire, explore, and produce gold as well as other precious metals in both Canada as well as Mexico. They have a market cap of $6.68 billion, and a very average beta of 1.01. Their earnings per share comes in at 0.55, and they have a price to earnings ratio of 30.65. Their return on equity, that comes in at 5.86, and they have a debt to equity ratio of 0.01%. Holy banana bread, I really love that number. They have one of the smaller dividends on today's list with a yield of 0.803%. That is paid out quarterly in the amount of 2.5 cents USD per share. The payout ratio on that is 24.39%. When we look at their returns, on the 3-year return on investment, we get 29.89%. Factoring in the dividends takes us up to 32.09%. When we look at the 1-year return on investment, that comes in at 76.92%. Adding in those dividends, we get 77.96%. When we focus on this year in 2023, the return on investment comes in at 20.60%. Adding in some dividends, it takes it up a little bit to 20.96%. Fundamentally, this is a nice looking gold company, and it definitely just made it to my watch list. In our almost top spot at number 2, we have Goodfellow Incorporated with a ticker of GDL. They are based out of Toronto, and they are remanufacturers and distributors of lumber and hardwood floor products. They also operate as a distributor and broker for, well, lumber. They have a market cap that comes in at 126.68 million. Their beta a little bit more volatile than the market at 1.23, and their earnings per share come in at 2.55. Their price to earnings ratio comes in at a nice low 5.82, and their return on equity comes in at 11.76%. As for their debt to equity ratio, that comes in at 25.95%, so that's not too bad. Their dividend is one of the higher ones you're going to see on this list today. They have a yield of 6.734%, and it is another semi-annual dividend of 50 cents per share. Their payout ratio comes in at 39.84%. When we look at their 3-year return on investment, it comes in at 114.46%. Add in those dividends, and we get a total return of 169.92%. On the 1-year return on investment, that comes in at 37.12%, and the total return after we add in the dividends is 48.20%. Coming back to this year, 2023, their return on investment, it comes in at 18.80%. Total return after we factor in the dividends of 22.80%. Once again, we have a solid investment, and this sector is looking pretty darn good. In our top spot at number 1, we have Stella-Jones with a ticker of SJ. They are based out of Montreal, Quebec, and they produce and sell lumber as well as lumber products. This company was in last week's list as well. It may be the first time a company has appeared in 2 consecutive lists. They have a market cap of 3.80 billion and a slightly less volatile beta of 0.70. Their earnings per share, that comes in at 4.43, and they have a price to earnings ratio of 14.79. Their return on equity, that comes in at 16.76%, and their debt to equity ratio, a little bit high, 82.25%, but still not that bad. When we look at their dividends, they have a yield of 1.422%. That is paid out quarterly in the amount of 23 cents per share. Nice low payout ratio of 19.41%. When we look at their 3-year return on investment, that comes in at 41.75%. We get a total return of 46.79% after we factor in the dividends. Their 1-year return on investment comes in at 60.04%. Adding in the dividends, we get a total return of 64.24%. Let's take a look at 2023. Their return on investment this year is 34.23%. Factoring in the dividends, we get a total return in 2023 of 35.17%. Not too shabby. Lumber is definitely looking good, and this is a company I do like a lot. I think this list has demonstrated that there is ample opportunity within Canada's materials sector. I do like the look of these stocks, and if you do as well, don't just blindly buy them without doing a whole extra heaping of due diligence. Always be sure to do your research before you drop your hard-earned cash on the table. Keep the learning going. Watch my video on the 0 to 100K TFSA challenge, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.